Hi guys, welcome back to my channel. Hope you guys are doing really well. If this is your first time here, I'm Lindy Peters and I'm a financial coach, here to help you plan for a brighter future and help you take more control over your hard-earned pennies with budgeting, saving, motivation and guidance. And I also share my investment journey with you. So today we will be having a look at AT&T. I'll be doing my analysis on Seeking Alpha, Simply Wall Street and Yahoo Finance. We'll also be having a look at an interview from AT&T's communications CEO. I'll leave timestamps in the video for you so you can jump to the parts that you are interested in. So having a look at AT&T, you can actually go and have a look at the company itself. They've got an investors website where you can get investors profile information, news events, financial reports, stock information, stockholder services, and a lot more. We can also scroll down for all the up-to-date news on the company, and you can go and find all the information you would like to find out about the company. And they also have a few clips showing you what ideas they've got for the future and where they are heading. Having a look at their dividend declaration, you will see for this quarter they will still be paying 52 cents, and this will be paying out on the 2nd of November. So AT&T is not cutting their dividends this quarter at all. And if you have a look at AT&T's Senior Executive Vice President's update, you will see that the Chief Financial Officer of AT&T spoke recently to the Bank of America Securities 2020 Media Communication and Entertainment Conference, where he provided an update to shareholders. Confident in the ability to generate strong cash flows, Stefan says that the company continues to have limited visibility to the extent and the duration of the impact and resulting government actions on the economy. In addition, while Warren Media continues to be impacted in areas such as timing and theatrical releases, as well as the production schedule, the resumption of sport is extended to shift the timing of advertising revenues and cost into the third quarter. Despite these fluid dynamics, Stefan reiterates that AT&T remains confident in the ability to generate strong cash flow given the resiliency of wireless and broadband services, continued demand of business connectivity. So today we will be having a look at AT&T, ticker symbol T. Today there are $27.33 US. And as all the other companies, they have taken a hard hit with coronavirus. So in my opinion, it looks like a very good time to invest, because hopefully the stocks will be going up again with all the new talk of the 5G and how well they are doing in the 5G market in the US. Now, if we have a look at the dividends, you will see the dividend yield is 7.6 at the moment, and the annual payout is $2.08. According to Seeking Alpha, dividend growth is 20 years, but AT&T is actually a dividend aristocrat, which means they have dividend growth of over 25 years. I'm not sure why Seeking Alpha's growth is not always correct, but I have noticed it on a few stocks in the past. And this company also pays out quarterly. Now, if we go have a look at that dividend growth, in 1996, they started paying dividends, and it's actually been a growth every single year. I don't know if it has to do with the stock split that they had in 1998, but they have been growing their dividends, which makes this a dividend aristocrat, and their dividends has been growing for the last 31 years. So if we go have a look at the dividend history, so if we scroll all the way down, you will see they started paying dividends in 1995, and the dividend has been growing since then. And if you have a look here in 2003, they actually paid out extra dividends to their investors, and it still keeps growing. So there's just something wrong in Seeking Alpha when it comes to the dividend growth, I think. But I actually have seen that this has been the case in quite a few stocks. If you're getting value so far, please smash that like button so it turns blue, and make sure you subscribe to the channel so you don't miss out on any of my new videos.
Joining us right now to talk about what 5G will mean for American wireless customers is Jeff McElfresh. He is AT&T's communications CEO. And Jeff, thanks for being here today. It's good to see you, particularly given how much news there is around 5G right now.
Becky, it's really great to join you this morning. And I agree, this week has been an exciting week with Apple's announcement on Tuesday, it's an iconic moment. It's a milestone for our industry, and it comes at a really great time for AT&T, our customers, and our network, which has never been stronger. I'm really pleased to share that Ookla's speed test has rated AT&T's nationwide 5G network the fastest. And I'm really proud of the engineers and the folks that have been hard in the trenches, investing heavily in the infrastructure in this country and this network. And as I'm sure you guys know, there's been a whole lot of noise this week. That announcement certainly generated a lot of posturing from some of our competitors. We saw how, in the case of Verizon, in very dramatic fashion, announced their nationwide 5G network. And I think if we're counting, that might be the third of 3 such networks in the U.S. And maybe from a T-Mobile perspective, while their network is improved, it's still second to AT&T's nationwide 5G network. And I think there's a lot of probably confusion for consumers about what this means. And I think the real winner this week is the consumer. It's the AT&T customer, Becky. And for us at AT&T, we're very pleased to announce that we introduced a very aggressive offer and something that is far superior to that of any of our peers in the industry, giving access to the best deals for both our existing customers as well as new customers. So it's a week where the consumer wins, and at AT&T, it's pretty simple. You get the nation's fastest 5G network on the best device at a very affordable price, and that comes at an important time in our economy.
Jeff, obviously, just given some of the trash talk this morning, this is a big deal for all of the carriers involved in what's happening here. There have been some questions raised on Wall Street, though. I think Craig Moffett had a note that he put out on Tuesday just saying he thinks it's a race to the bottom in terms of trying to win these customers, and that these are some pretty big giveaways. Verizon had said that they're going to be trading in, offering a free phone to new customers coming in. You're right, your offer's better. You're talking about allowing a trade-in for existing ones, new customers coming in for some of these things. But Craig Moffett just says that this is what the promotions are so big that these are rather steep, like $600 a phone. Is that something that AT&T can afford right now?
Well, I think if you pay attention to what consumers want, they're looking for access to high-quality networks and value and offers, Becky. And I got to remind you, this is a very competitive marketplace, and the dynamics that have played out over the past several quarters this year have proven that it's a very competitive market. And as we at AT&T have a priority focus on establishing market momentum in our wireless franchise, we're bullish on this. We see this as a long-term value play. We've got a lot of loyal iPhone customers. As you know, we launched the very first iPhone in the industry many moons ago. And so we're actually in service of our customers, creating a high-quality experience and value that we think plays out in the long run.
Now, if we have a look at the valuation, you will see the current price is very undervalued. If it goes back to or close to where it's a fair value for this company, you can make an increase of growth of 62%. Now, if we scroll further down and have a look at the price per earning ratio, you will see the PE versus the industry is quite poor, but the PE versus the market is quite good. If you have a look here at the illustration, if we have a look at the price to earnings growth according to Wall Street, it's quite poor. And if we have a look at the price to book ratio, you can see there's a bit of a difference between the industry and the market, but it's not that big of a difference, but it can make an impact on the growth to the company. If we have a look at the forecast of future growth for the next 1 to 3 years, the forecast earnings is a 14.4%, which is really great in my opinion. Now, analyzing future growth, you will see the company AT&T is at 14.4%. The industry for telecoms is 9.1%, but the overall market in the United States is 22.1%. AT&T is quite in the middle of this. It's down to you to decide if you like to get some of AT&T stocks, or would you rather go for an EFT that's in that industry. Now, having a look at the past performance, you can see over the last 5 years they've got a 10.8% growth. If we have a look at their financial health, you will see their asset liabilities for short term. their asset is a bit lower than their liabilities, but on the long term, their assets is a lot more than their liabilities. If we scroll down, you will see from 2015 to about end of 2010, their debt was a lot more than their equity, where at the moment it's all quite changing around. And if we have a look at their balance sheet, you can see their assets, their liabilities. There is a bit of debt for this company. Their assets overall is a lot more than their liabilities and equity. So having a look at Yahoo Finance, AT&T is still 27.33 on the 16th of October. Market cap is 194 billion. PE ratio is 16.6. And the forward dividend is $2.8, which is 7.61%. And the stock range for the last 52 weeks was between $26.08 and $39.70. So if we scroll down to the earnings, you will see the third quarter in 2019 they beat, the fourth quarter in 2019 they beat. They missed their first quarter in 2020, but I think it has to do with everything going on and it had a big impact on the company. But for the second quarter they went back to normal and they actually beat their estimated by a lot more than they estimated for, but we are waiting on the new estimations. So if we have a look at the recommendation, we have a lot of strong buys, a buy and a lot of holds at the moment. So at the moment this is a 2.7 between a buy and a hold. But as you can see, the lowest it's been is 17, the current price is 27.30. The average cost is 31.96 and the high is 43.
Just a disclaimer, I am not a financial advisor, I'm just a financial coach. So please make sure you always do your own stock research before you invest your money. I'm just sharing my opinion and my investment journey with you, but I'm not a professional investor. I'll leave a link in the description below if you'd like to give me a call to discuss any of the topics in my videos. If you found this video helpful, please give me a thumbs up to let me know, and make sure you subscribe and ring the bell so you don't miss out on any of my new videos. If you've got any topic requests or any questions for me, please comment below and I'll get back to you personally. Have a lovely day, guys. Bye.